Hello, welcome to a video where I will spotlight two stocks that I think present a good opportunity for me to take a bearish short-term stance on the stock. I follow a lot of stocks and I don't short ever a stock. Whenever I am bearish on a stock, instead of outright short a stock, I tend to do put spread. I buy a higher put and sell a lower put. Sometimes I buy a naked put. I just outright buy a put if I'm bearish, but I have never actually shorted a stock. I may have shorted a stock maybe 20 years ago, but it's been a long, long time, and I can't even remember which stock it was that I shorted. But for the most part, it's always been just put and put spread. But I spotted a couple of good potential that I will likely try to put on a trade tomorrow. I'm shooting this video at 4:30 p.m. December 28, 2023. We have one more trading day to end the year and close the book on 2023. But right on the screen, OKTA. I have not been in OKTA in a long time. I was long OKTA and then I was out of OKTA. I think net I didn't make much money or lose much money. I have been following it, keep an eye on it. Missed quite a few chances to buy. It's a fairly defined range that if you play the range, you likely make money. You can see it right on the screen. You can see the range as far as buying down here, right? Let's do it. Let's do it. Okay, you know me. I color in the gray zone above, but let's do this so that we know going forward to buy the dip zone. See, a very well-defined range that if you buy in the gray area or near the gray area down here, you likely make money, and then it's good to get out on top. So right now, in this bubblicious late December move, well, for the most of December, this thing has been ramping from 74 to 92 into the sell zone, right? Plus, on top of that, you have declining volume. Okay, so it's a divergence of declining volume. Volume on the market for the past 2 weeks has been lower and lower and lower, and then you have higher prices. So this is very bubblicious. So for me, depend on what the stock do tomorrow. Hopefully, it's going to be another early green candle, and if that's the case, I'm looking at something going out 2 to 3 weeks, maybe a Gen 19, do a 91.86 kind of put spread. I'm looking at the price of the put spread right now on a different screen. I'm doing it on my E-Trade, which is easier for me to see. Not a big fan of how Thinkorswim present the data. I'm just more used to E-Trade. Right now, for Gen 19, the 91 put is about 320. Okay, it's ranged between 315 and 330, but let's say I can buy a put, say, for 320. And then an 86 I can sell for $1.30. So give or take $2, a debit of $2. That might be a good play. Max gain, it would be, let's see, from 91 to 86. Okay, so you're talking about $5, and it will cost me roughly $2. I like that. Okay, but I will play around with the different option tomorrow. But for now, I think that might be a good risk and reward play as far as short. Can you be more aggressive and buy a 91 put up there and sell an 80, you can. But for me, at least 85. Okay, at least 85. But we'll see. But I think that that's a good play. So for now, right now, OKTA is a good candidate to do a bear put spread. Somewhere in a range of 91 and 80, right? I like that. Going out 2 or 3 weeks, give myself some time. The other one that I like also is RBLX, another one that I trade in and out the last 2 years, and didn't make a whole lot of money. I might have lost a little money, but once again, it is in that zone. Okay, let's draw in the zone, the danger zone. Okay, once again, volume is not all that crazy, not as bad as OKTA, but also you have not confirming volume compared to this move up, right? You have declining volume on a very big up move. In fact, you're talking 80% kind of move from 20, just under 25 to 46. Yeah, I I think it's a good trade to get in on the bear side here, short term. Okay, now I can be wrong, but that's why I'm doing a put spread to limit my exposure and cap my gains and loss. All right, so right now, if I'm doing Gen 19 once again, I'm looking at 46 Gen 19. To buy a put there, it would be $1.50. $1.50, and where would I do it? 46 down to 40, right? So $1.50 there, and sell a put at 40 would be barely anything right now. The premium would be 16, 17 cents. So the cost would be about roughly $1.35. Okay, so the debit would be $1.35 for a $6 drop. Okay, not a bad risk reward play either, right? So the risk 100 something, max gain 300 something. I like that. So yeah, if both stocks, both OKTA and RBLX stay up in this gray zone tomorrow, then I will look to put on a couple bear put spread to take advantage of what I think will be a decline sometime in the first 2 weeks of January. Thank you for watching. Bye-bye.